I am Tara Jensen, the Program Manager at Loudon Habitat for Humanity. And today I have with me Landy Patton, and we are going to present on homeowners insurance and what all homeowners should know. Landy, thank you so much for being here with us.
Happy to be here. Yeah.
Great. So again, if you're here, let us know, put it in the chat function, and we will get to your questions after we go through some of ours. So today, Landy and friends, we are going to talk about the different types of homeownership policies, or the homeowners insurance policies, how to select a policy based on the different coverages and components, and how to file a claim through your agency. And with that, Landy, I think we're ready for our first question. So sometimes insurance policy selection can be very overwhelming, especially for first-time home buyers, or if you haven't done it in a while, maybe you need a good refresher. So what are some insurance basics that can help us to understand and get started?
Yeah, certainly. So I guess I'll start by saying that there are tons of financial advisors out there. Insurance is a component of your financial plan, right? So whilst financial advisors are trying to make you money, insurance agents are trying to make sure that you don't lose it, right? So insurance is basically protecting against hazards and finding ways that you can take the risk that you have a lot of risk for yourself, and pass it to somebody else who will, for a premium. So you will pay them money, and then they will make sure that you are protected from that scenario. So, we're looking at a basic or a broad look, or 30,000 view of your insurance plan. We talk about the triangle of protection, as you can see here. That consists of disability insurance, life insurance, homeowners insurance, and there's actually another one that goes in there I call, which is liability insurance, which we can touch on later. But essentially, if you think about it, there's only really a few things that can derail your financial future, and that's one is if you get disabled and you aren't able to work, so you can insure against that. A lot of employers include it in their benefits package, but it's available outside as well. Life insurance, so if something happens to you, is your family able to maintain their standard of living, keep the house, etc.? And then homeowners insurance, what happens if your house burns down or a tree falls on it or something like that?
Great. Thank you.
Yeah, you bet.
So what are the different types of homeowner insurance policies that we can select from?
Certainly, there's many types of insurance out there, although nowadays you're only going to really see a couple of them, okay? Once upon a time, it started in New York. Somebody wrote a policy for somebody, and along the way, it's evolved. It's a legal contract, right? So the language changes over time. So that's what these, they're called forms, are HO1, 2, 3, 4, all that sort of stuff. When you're looking at buying a house, you're going to see two main types of policy, and that's going to be HO3 and HO5, okay? The differences between them depend on the loss settlement provision. So how is the claim going to be paid out? HO3 is the most common. It's less expensive than the HO5, and it is an open peril policy, meaning it's going to cover everything that you can think of unless it's specifically excluded or written in the policy language that we are not covering this, okay? HO5 is a more comprehensive policy. It's going to cover things with replacement cost of value versus actual cash value. Basically means it's not taking in depreciation, okay? Which is a good thing. If you have an HO3 policy and you have a loss, you might not get all the money you need to recover from it, because they can depreciate things and stuff like that. So budget allowing, the HO5 is one of the stronger policies you can get out there. My advice would be, if you can afford it, go with the HO5, or at least get a HO3 policy that is heavily endorsed, meaning that they've taken an HO3 policy and they've added bits to it to improve the coverage. All right. That's on the home side. Really, you won't see the HO1 or the HO2 really anymore. In fact, I haven't seen one, but it's not to say that they aren't out there. You just won't see a major company writing those, I wouldn't think so. HO6 for condos, and then HO4 for tenants. Now the difference between the HO6 and the HO4 and the HO3 and the HO5 really is the fact that when you're renting, you don't own the building, so you don't have to take into account the dwelling coverage. And on the condo, you only are responsible for the interior, not the exterior. The exterior is owned by the condo association, and you own your unit inside it. So for the HO6 and the tenants form policy, they're less expensive than the HO3 and the HO5 because you don't own the whole structure. Hopefully that helps some.
Yes. Okay. Thank you. That is very helpful information, because I think I was mentioning to you when we were talking about this, you know, I had a house, they presented me with one, so it is nice to know that there are different options. It's probably something to go back and look on. So thank you for that, Landy.
You bet. Yeah, it's important. You know, I'll say this again at the end, but you know, agents work on a commissions basis. So my time is basically free. I mean, it's not, but it is, right? So I encourage everyone to consult with the professionals. You can do it online, but yourself, but why would you? Like, spend time, talk to some agents. They'll educate you and help walk through any questions you have at no expense to you.
Great, that's good advice. Okay, so our next question, and you had mentioned this on the last slide, so I think it's good to clarify. What is the replacement cost and how do you estimate it? Yeah,
so your homeowners insurance, when we're talking about the HO3 or the HO5, we're talking about putting your house back together, right? That's one of the points on the triangle. To do that, we need to know how much it costs to build your house. Loudoun County, the land is super expensive. So when you're looking at appraisals and stuff, oh, well, I'm buying my house for $400,000 or $500,000, but it's only worth $250,000 to rebuild. You know, there's a big disconnect there. And that is called the replacement cost. So there are a number of ways to do this. Agents and companies have built tools to do so. If you think some of the major insurers insure thousands and hundreds of thousands, millions of homes across the country, they have a general idea of how much it's going to cost to put that house back. So they build these software that allows us to go into the tax records and Zillow listings online and things like that to pull the characteristics out of your house and put it into the tool to determine how much it's going to cost to rebuild. It is an estimate. These tools are called estimated replacement cost tools. So it's never exact. One way to do so is utilize the appraisal. Normally on page 3 or 6 of the appraisal is going to be a line item there called cost to build new. So these appraisers go in and they're looking at your entire house. So they can see all the things in your house, like what do you have chair rails or crown molding in this room? Do you have solid surfaces in the kitchen and granite or upgraded cabinets, things like that? And they can put all that in their estimate to replace it as well. So we try and get as close as reasonably possible. Some agents tack a little bit extra on there to you know, just as a buffer, just to make sure. And then most companies are going to put 20%, or each company has their different limit. 20% is the one I see most common, on top of the dwelling coverage, which is the replacement cost, also known as the coverage A. So just tons and tons of words out there for you, but all meaning the same thing. In response to to major events that come through. If all the houses blow down in one storm, it's going to cost more to put them back because supply, and both with the work as well as the materials, is going to increase in price. So you want to make sure you get your replacement cost as close as possible to the rebuild value of the house. Err on the side of getting a little bit extra. You don't want to be left, I guess, without enough money.
High and dry.
Yeah, so yeah, I mean, we're talking, you know, $10, $20 a year to get a little extra. So just get a little extra and you can sleep a little bit better at night knowing that you'll have enough money there. I guess it's worth mentioning too that homeowners policies have often an inflation rider on there. So every year the price is going to increase a little bit, but also the coverage A of the dwelling replacement cost is going to increase a little bit too to keep up with inflation.
That's good to know. So we can assume that the costs will go up, but they're monitoring how that's going based on the.
Yes, yeah. You don't want it to see it like going through the roof, but a reasonable, a small amount for it to tick up each year, it can be expected. Yeah.
So
you know,
I guess this is this is a good time to ask. So do you recommend reviewing it annually because it does change?
So yeah, I review annually with customers if they would like. It's individual, what individual people feel like is important. I like reviewing annually because that avoids going 5 years and being like, hey, I had 3 new kids in the last 5 years, and you know the house is exactly the same, so maybe we don't need to make any changes to the home, but other parts of the insurance plan should be adjusted with life events and things like that. So it's worth every year, even if it just takes 10 minutes to be like, hey, yeah, nothing's changed, everything's good, and let's keep on going, right?
Yeah, definitely.
Like I say, commission-based, so
right. Well, and
give us a call.
The triangle that you had mentioned earlier with the, you know, the disability. So yeah, I can see that needing adjustment. So okay, great, thank you. All right, so Landy, what is liability coverage?
Yeah. So the fourth part of the triangle, right?
Yep.
Yeah, liability is often overlooked on the auto insurance aspect. It applies to the home too. Really, we're protecting your financial future from lawsuits, things like that. This is covering your income, any assets that you have, so your house, things like that. Most often people get it wrong on the cars, like I said, but on the house specifically, my advice, get a lot of liability. It's so cheap. I mean, we're talking like $10, $20, $30 a year for hundreds of thousands of dollars of coverage. So unlike the cars where it steps up in increments, depending on what limit you choose on that, you can get much more on the home for less expensive. Ultimately, you need it on the car and the house. And the best scenario is to have a lot of liability on the car and the house, and then supplement that with an umbrella. A lot of acronyms for it, PUP, things like that. But it's personal umbrella policy or personal liability umbrella policy. And this is going to add in increments of $1 million more coverage on top of that. So in a hypothetical scenario where you get sued for, say, medical damages of $400,000, $500,000, $1 million, the umbrella would kick in and potentially cover legal fees and other costs associated with the lawsuit. Like I said, it's cheap and it's often overlooked, so a good topic to touch on.
Absolutely. It's so hard to know what's coming, so it's always better to be prepared.
I agree.
That something does happen. How do we file a claim?
Certainly. So, I mean, every company is different. If that company has an agency force, or you have an agent that you are working with, the first step would be to call them. Agents can have a lot of input in helping the claim process go smoothly. So depending on which company you're with, you're either calling an agent or you're calling a 24-hour call center. I guess it kind of depends on what time you call. If you call my office at 4 in the morning, no one's there, so you go to the call center. But there are a couple things you can do to help yourself during, in the eventual potential of a claim. And the first thing I say is, if you're moving into a house soon, take a couple extra minutes to take an inventory of your stuff. If you take photos or a video, the more information you have on your belongings, the better, because you can give it to a claim adjuster and say, hey, look, this was on this date, we had this, and it will make things go a whole lot smoother.
I can see being under a little bit of stress that it would be hard to recall the value of all of the assets that you have in your home.
I mean, could you tell me? I'm trying to think. I have no idea how much stuff I have in this house now. I mean,
I think I can only do it now because now that we're working at home, I can take a quick inventory. But no, I think it would be hard. It would be very hard. So that's a really good tip.
Yeah, I mean, if you were like taken out of your house right now and said, hey, write a list of everything you have, I don't think it's possible.
Deer in headlights. Deer in headlights.
Right.
Yeah.
I mean, there are some things that you should think about with your home policy, specifically reference to a claim, things like loss of use as well. There are fringe, well, maybe I shouldn't say fringe, but there are line items in a policy that are specifically related to a specific scenario. One listed here is the loss of use. Some companies could put low limits on this, and this is if you are temporarily removed from your house, say it's being rebuilt, you're going to have expenses for accommodation during that time, and if you have a low limit on that, then you're going to be out of pocket quite a bit of money, even though the insurance company is, staying good to their promise and rebuilding your house. You could still have a lot of expenses that you weren't expecting. So that's what the loss of use comes in for. So you want to make sure you have good limits on endorsements like that, or line items like that. So that's why I said, again, call an agent, look through the exclusions and the endorsements and things like that to make sure that you know how the policy is going to impact your life if you have a claim.
Great. And can you just cover some of these endorsements and exclusions that you mentioned?
Oh, there's so many.
Well, actually, just share with us
yeah,
what they are and what we'd be looking for. So
yeah. An endorsement is, like I said before, these are legal contracts. So an endorsement is a amendment to the contract. So it can work to add coverage or take away coverage. Often when it's take away coverage, a lot of us also use the word exclusion, saying it's excluding coverage, right? So for instance, earthquake, it's not covered under the main form. It can be added by an endorsement, but otherwise it is excluded. See how I did that there?
yes.
Common to Northern Virginia, backup of sewer and drain is an important one. This is often seen in Northern Virginia because of the amount of rain we get. It includes often coverage for a sump pump failing. And the sump pump is a pump in your basement which pumps the water out of your house. So if water is coming into the basement through the foundation or through a outside drain or something like that, if your sump pump can't keep up with removing that water, then your basement fills up with water, and then you call your insurance company saying, hey, I've had a flood in my house. Well, it's not a flood. Flood is defined differently, but if you have that endorsement, it could be covered. If you don't have the endorsement, then you're looking at remediating that claim and ripping out all your drywall and replacing it, which adds up quickly.
Okay, well, those are really good tips.
I believe that helps.
Yes, I did not know that. So I do know the difference between rising water and correct?
Yeah.
Louisiana, so I know that there was a separate flood insurance and then the rising water. So
exactly.
I fall in the endorsements and exclusions as well.
Yeah. And flood is often covered totally separately from a homeowner's insurance policy. Isn't going to cover flood. You need either a flood policy on the private market or through the National Flood Insurance Program or something like that.
Okay, good to know. And so we are in Loudoun, and that's where we're based and talking about, but is that something that we should be adding to policies here? Are we concerned about flooding in this area, even though we're not high flood zone?
No, the backup of sewer and drain you should be adding. The flood policy, it depends on where you are. So there is a handy tool on FEMA. I'm pretty sure it's FEMA that has the tool on their website, where you can pull up a map and it has superimposed the flood zones in the area. So you can pull that up, put in your address, and it will tell you if you're in a flood zone or not, or how close that flood zone is. You want to be in flood zone X, which is an area of minimal hazard. But call an agent, ask them to look it up for you.
Yeah, like you said, it's a no charge. So yes, okay, good. Great, excellent. Well, Landy, that ends some of our questions. I do think that we have had some from our viewers. Stephanie, thank you so much for joining us today. I'm going to read off some of your questions. Landy, is it common to need liability insurance? And I might read the next one. Is the liability coverage usually in an HOI policy? Or is it something that you really need to specifically request?
So yeah, liability will be included at some level on all policies, right? With respect to the auto insurance, the DMV requires you to have car insurance, but they don't care about your car. They care about your liability. So you can have what's called a liability only policy, where all you have is liability. There's no coverage for your car. On the house, every policy is going to have liability in some form on there. It's just what limit that is capped at. So what I'm specifically saying, my advice is to request a high limit for the liability.
That's great. I do have another question. Are endorsements expensive? Do they?
Some.
That's a
there are
good
a lot
question.
of different endorsements, and it depends basically on where you are and what you're endorsing, right? So it depends on the value of your house. For instance, like an earthquake endorsement, right? It's going to be determined on the rebuild cost of your house. So if your house costs a fortune to rebuild, then the earthquake endorsement is going to cost more. So I wish I had like an easy answer for you there. They vary widely in price. There are some very inexpensive endorsements, some very expensive endorsements. You just want someone who's going to go through and list the different endorsements available to you based on the company, so that you can make an educated decision on, do I want that, or am I going to self-insure for that scenario?
Great, thank you. So what type of assets should you include in your coverage? Some of my research includes things like jewelry and firearms, but are there other assets that you can include?
Hey, that's a great question. I like how you specifically mentioned jewelry and firearms. So a lot of companies will put specific limits on their homeowners policy or things like jewelry, firearms, furs, merchandise samples, things like that. I like to think of it like this. At one point, jewelry was covered. And someone then called their insurance company and was like, hey, I just had $100,000 of diamonds stolen from my basement. And the insurance company is like, yeah, right. So they added limits to for specific items. So often you'll see a homeowner's policy with a limit on jewelry saying, hey, we're only going to cover, say, $2,000 or $2,500 of jewelry. So if you have higher value items like that, you can insure them under individual policies. Often you'll hear the term a jewelry rider or a personal property policy or personal articles policy, something like that. So I guess that kind of answers your question. It's not really, and I guess it could be an endorsement by changing the limit on that, but there are limits typically for things like that. And you want to, if you have those high value items, inquire about having a personal policy just for that.
Right, great. Someday.
Right, when you get your $100,000 diamond.
Right, it's coming. Is there somewhere that I can research the different types of endorsements?
Google, maybe. I would say a good starting point would be the company websites. So, you could go to the major insurance companies and read through their websites. They probably have information on most of the endorsements available. Agents, like I said, we're a resource. We represent different companies and different policies. So we each have our own strong suits and knowledge on different parts of the policy. So give us a call and ask questions. Most people are extremely friendly and happy to let you know whatever you want to know.
Yeah, and I guess it would be beneficial to say shop around. I know that you are an agent, and so you can be here, but but shop around. You can see different policies and what makes sense for you and your individual situation. So
certainly, yeah. Talk to different people and find somebody that you want to find a company that you can trust and a person that you can trust, right? Mm-hmm. So get an agent and a company that you trust to help walk you through it. Then you want to make sure that it's a policy that you can afford, right? No sense in trying to get the absolute most amazing insurance if you can't afford it. So you want to make sure that it's going to work with your budget, and then hope that nothing goes wrong.
I know. Okay,
I will say you can't reasonably insure for every single loss that's out there, right? So every single hazard or risk available to you, that could impact you, right? So you want to be pragmatic and choose a policy that is strong, that's going to cover as many things as you can think of, and then do your due diligence to get a good appraisal, get a good home inspection, and then maintain your property, keep an eye on it. There are things that are going to be excluded or losses that aren't insured under homeowners policies, like animal damage is a common one, and that includes things like insects. So termite damage would then not be covered. So you want to make sure that you're keeping an eye on your property.
Right. So are all the policies the same per state? So we have in Loudoun, we're Virginia, but we are neighboring to other states. Are the policies all the same or different?
Yeah, every state is different, right? So
yes.
There's an insurance commission, and there's insureds bureaus and all that in every different state and all that, and they all set different regulations that you have to abide by. In general, things are pretty similar. Some states will have different endorsements and exclusions and things like that. You know, in our area, West Virginia is just across the border. They have mine subsidence for, you know, they do a lot of mining out there. So if your house is built on top of a coal mine and the coal mine collapses and your house goes with it, then, you know, so if you live in West Virginia or you plan to, then ask about mine subsidence. And in Maryland, we have sinkhole collapse because there's a lot of karst topography, which is limestone. So I'm a geologist, so I know that. Or my master's in geology. So, but anyway, karst limestone can have sinkholes, and if your house is unfortunately swallowed by a sinkhole, then there might not be coverage associated with it. So there are different like quirky things like that. So definitely consult with an agent who knows about that state.
Right. That's really good to know. I'm a Maryland resident, so it'll be something to look into. So that's great. Thank you. I do have one more question about the condo insurance. Condo insurance, you know, you had mentioned that is the interior walls, and I guess the HOA will have the coverage on the exterior, but do they ever combine or overlap at all? I'm just wondering if there are situations where something happens on the exterior and it impacts your interior, and how
That's a good question.
I'm sure it happens a lot.
I can't think of anything specifically, and I can't, and so I wouldn't really want to say definitively one way or another. You know, one thing you'll find again is agents aren't lawyers, so and it's a legal contract, right? So although we know a large part of the ins and outs of each policy, agents really aren't qualified to answer any legal questions about, is this covered or is this not covered? Like that would have to go to a claim representative or a lawyer who's defending you or something like that. But with the condo association condo policy, generally the condo association is responsible for the outside, and you are responsible for everything starts in. Loss assessment, right? If say there's a swimming pool, this could apply in the homeowners too. If you have a homeowners association, say someone hypothetically dies in the swimming pool and sues the homeowners administration or the condo association for negligence, and say the HOA or the condo association has terrible insurance, or they lapse their insurance, or they run out of money, they can levy an assessment on all the people who are part of the homeowners or the condo association and say, hey, we've been sued, you all owe us this amount of money to fight the fight the judgment, or to pay the judgment, or whatever the legal term is, and then you got to pay up. So there is endorsements for loss assessment as well.
Okay, that is very good to know, because I do know that we have a considerable amount of condos in the area, and I think more and more as we continue to build, I think that will be something people will need to know. So I appreciate you chiming in on that. I think that's actually all we have time for today. Landy, thank you so much for being here with us. You have answered so many questions and shared so much valuable information. So much of this is new to me, so it's been really educational. So thank you so much.
Well, I hope it helps. And, you know, like I said, call an agent. People are happy to help.
Absolutely. Great. And thank you so much for those of you who have joined us. We hope that you have gotten some really good information too, and can take this and really get some good searching going for your own policies. On behalf of Tools for Life Learning Center, thank you, and we hope to see you back. You can check out our website at loudounhabitat.org, go to our programs, our Tools for Life Learning Center, and you can see all of our upcoming workshops and actually our past workshops as well. So thank you again, and we hope to see you soon.